You know that feeling when someone shows up for you just when you need it most? That's what Uber is all about. Not just a ride or dinner at your door. It's how Uber helps you show up for the moments that matter. Because showing up can turn a tough day around or make a good one even better. Whatever it is, big or small, Uber is on the way. So you can be on yours. Uber, on our way.
Reality radio for a really great future. We're talking real money.
Welcome to the show about your dough, the Talking Real Money radio show and podcast. I am Don McDonald in Florida. Tom Caulk is in, somewhere in Washington, some little teeny tiny town that has a mayor who gets haircuts.
No, that is a different town from the mayor.
Bellevue, right?
No. Woodinville, actually.
Woodinville. Well, bigger than Duval.
Quite esteemed.
Yeah.
Yeah, oh yeah.
Hey there. Hey, by the way, we fixed the phone. 855-935-TALK is our phone number, 855-935-8255.
I'm so glad that's you, not me, because I wouldn't know how to fix anything. You know that.
I know how to fix everything.
If it was broken, it'd be years. I'd be
I know. It's so funny. Right now, Tom's computer, we FaceTime a lot. We're
every day,
like connected at the hip. And
it's our deal.
At the hip, we're
leave it at that.
Yeah. Okay, at the shoulder. Let's go with that.
Okay, fair enough.
The skull, whatever. And he can't get the audio to work on his MacBook.
Yeah, if you know how to fix that, could you call me? I'd really appreciate it.
I was trying to tell you,
not
but
you.
You weren't paying attention.
No, somebody. I'm talking to anybody in the audience.
Apple Care is 7 days a week.
I know.
You can call on the weekend.
I got started on it and ran out of time, so I need to do it again.
It's the weekend.
I know. As I said, I'll try it again. This was yesterday.
You tried at work and you got busy, but that's
I know.
Do it on.
Are you saying I do nothing on the weekends now?
Well, you could
watching soccer games and eating food that's an occupation. That's not as simple as it sounds.
Yeah, well, whereas I am sitting around mourning the demise of the United States debt rating. I worked my whole life to get like an 820 credit score because your credit score is really important to you. And apparently Australia, Canada, Denmark, Germany, Liechtenstein, Luxembourg, the Netherlands, Switzerland, Norway, Sweden, and Singapore, and the European Union, but not as much. Singapore, they all think very highly of their debt rating, and so they have AAA debt across the board. Well, in the United States, we don't. It's a sad thing.
We still have some A's in it. It's big A, little A1.
Yeah, AA1. Moody's went from AAA to AA1, and we're AA plus with S&P.
Yeah, okay, but let's talk about what this really means to you, the investor, because it's not good news for any of us, because it's going to be, at the end of the day, it's going to cost more to borrow money. Which is bad, right? That's a bad thing.
It's going to cost us.
That's right.
We're going to have to pay more in taxes some way or another to service the debt.
Yeah.
There's no way around this math. There are people in Washington who think there's a way around the math. Like we can magically cut the cost of government and solve the problem. Well, Elon Musk is, while annoying, a very bright man. And he kind of discovered that cutting the cost of doing business, most of that is servicing
I think they have,
the debt.
Okay, all joking aside, I think they did come up with a plan that you haven't considered. Well, they're going to spend $45 million on a parade, and they're going to charge everybody to watch it, I guess.
Oh,
is that what we're going to do?
Pay-per-view. Pay-per-view.
I'm sorry, I couldn't help myself.
But what's
There's
sad,
a lot of other jokes
before we get into the effect on people, Who has the same credit rating as we do now in the world?
I think you told me this morning. So
Austria.
I know. Well,
Finland.
They have Salzburg too, by the way. They have mountains that sing. We don't have those.
Okay.
The hills are alive.
Taiwan has the same credit rating we do.
Well, they're threatened by China the way we're threatened by Canada, I guess. I can see that.
Oh, yeah, there's such a risk of invasion from Greenland.
But, I'll putting the jokes and the hilarity aside, because this is a serious moment.
It is a serious
But what does it mean to you as an investor? Because the 10-year yield, by the way, I noticed did go up to almost 4.5%, and treasurers are going to have to pay more now because that's the cost of borrowing. But what do you do as a result of this? By the way, we're now spending, and I did read this a couple months ago, we're now spending more interest on the debt than we are on defense, which is never
That's what I'm saying.
good thing
It's
either.
become throw Social Security out because Social Security really
Correct.
shouldn't be part of the main budget because it's a
Shouldn't
separate program. So
Agree.
the number one thing we as American taxpayers spend our tax dollars on is paying interest on the debt. Paying interest on the debt more than we spend to defend our country against all of the scary people out there. And this is not better. This is worse. We'll be right back. 855-935-TALK, our number.
Tom and Don are talking real money.
Does it ever feel like you're a marketing professional just speaking into the void? Well, with LinkedIn ads, you can know you're reaching the right decision makers. You can even target buyers by job title, industry, company, seniority, skills. Wait, did I say job title yet? Get started today and see how you can avoid the void and reach the right buyers with LinkedIn ads. We'll even give you a $100 credit on your next campaign. Get started at linkedin.com/results. Terms and conditions apply.
Your guides to a really great financial future. Tom and Don are talking real money.
Really important topic because you need money. You're not getting through life without it. 855-935-TALK is our phone number here at the show. Every Saturday, noon to 2, Pacific time, 3 to 5 Eastern, 855-935-8255.
Yeah, and before we get to the calls, let's just finish up this topic about the United States losing its last top credit rating, according to Moody's. What do you do? As an investor, how do you respond to that? Well, there's a couple of things. First of all, like stocks, our take is you should diversify with your bond holdings. Let's add a little global debt here. Yeah, a little. Yeah. Let's spread the money around. Quality, again, remains important. We're not going to, I can't say Argentina anymore, right? Because they're paying.
No, they're
paying
okay now.
Okay. For the moment, they're all right.
The rating's going up. I don't know what's going on.
But let's move it around.
The world's turned upside down.
Exactly. So number 2, yes, we would still use treasuries as we do in our portfolios. We use them in exchange traded funds or widely diversified. And number 3, this is perhaps more important now than it's ever been, and that gets around to the maturity, how long the security is. So we are going to want you to be short and intermediate term, not get too far out there where it could get even riskier, I think, with that debt, Don. So all the things we believed before still hold. We're still going to use treasuries. We're still going to be short and intermediate term debt, but we're going to want to add in a little more of that global stuff just to diversify.
Yeah, Argentina's still got CCC debt, though. So
okay, I feel better.
We're doing a lot,
but I can't
better.
use the 99-year Argentinian bond joke anymore.
No, because that actually worked out for somebody. 855-935-TALK. It's so easy to call us, and we do so love trying to help you with your personal financial issues and trying to do it transparently and honestly and simply, too, so that you can understand it. Let's go to Marysville, Washington. Ike, you're up. Welcome to the program.
Hello there.
Hey, Ike.
How you guys doing?
We are just fine now that I'm home. I like being home. There's no place like home. What's up?
Oh, yeah. Hey, my wife and I are both going to be 72 and been retired about 8 years. I was just going to lay out my income and see if you had any ideas.
Lay it out, dude.
Okay. I own a rental property in Marysville, and I get $1,500 a month on that, which I know is low. But and we have Social Security, both of us. Total is about $4,000 a month, and I have a pension that's $4,200 a month. And then we have 2 other funds. One I have with E.F. Hutton used to be, but $200K. And my wife has a 401K from her previous work that's around, well, depending on where it's at after this little tariff thing. And it's valued at $550,000.
Okay.
So that's,
what's your question?
Well,
this sounds pretty good to me.
Yeah, you're in good. I think. I mean, we don't know what your income needs are.
How much you need?
Is that almost 10,000 a month meeting your needs?
Yes, it is. Yeah, it is.
Okay.
And we're just wondering, I mean, as far as, with that, my wife's is in pretty safe stocks and stuff.
Okay, wait, I'm going to stop you there.
House,
What is that? What does that mean, safe stocks?
Well, I don't know exactly what they're in. It's with, no, I can't think of the name of it now. Templeton?
Okay, so it's because you mentioned you were with a brokerage firm.
Yeah.
Here
Right.
are some of the issues that I saw, the glaring issues, if this was just a broad overview of what you've got. One, how much is that rental property worth?
Probably $500,000.
And do you owe anything on it?
No.
So it's a free and clear rental property, and are you paying someone to manage that for you? Or are you doing it yourself?
No, I do it myself.
Is this something you love or hate?
Right now it's working fine. It's like I don't even own it.
Okay. Then that's fine, because that's kind of a part-time job. We don't have any issues with that. The other one, the money you have with your brokers, whoever it is now, I don't know who E.F. Hutton became or whatever, but the fact is you're paying, both you and your wife are paying a lot more money than you should for probably, and this, without looking at your portfolio in detail, I can't say this with any degree of certainty, but based on tens of thousands of calls over my career, I can pretty much tell you that I bet you have
Empower.
Oh, it's with Empower. Okay. I can guarantee that you're going to be looking at something that's a portfolio that's it's not in your best interest. It's probably not the best portfolio. It's probably a hodgepodge, and it probably needs help. But otherwise, if you're doing all right with that income stream, the only thing I'd do is I would have somebody look at the brokerage accounts and see about reinvesting those into something that's more cost efficient and more probably diversified.
And the other part, I would have a strategy for the rental house because, again, as we get older, we like to be the managers of those things less. It gets to be more difficult. So I might say in 3 or 4 years, whatever it is, I'm going to plan to sell that or clean that part up or have a professional manager so you don't ever have to worry about it. But I'd have a strategy to that as I got a little older. But I agree with Don. I mean, this sounds great. Got plenty of income. You've got the savings, get that kind of cleaned up a little bit.
And I did want to add one other thing. I got kind of caught up in the whether you like managing it or not. Raise the rent, because you're only making 3.5% gross. I mean, you'd be better off putting that 500. You'd make more money and do no work by putting that in a high yield savings account.
Still paying over 4 today. So, yeah. Good point, Don.
Well, that's a good point, yeah. It's the old story. I've known the guy forever. He's a real good tenant.
You're a nice guy.
But,
let him be somebody else's tenant.
What? Then here's what I might do. I might do this. Sell it to somebody who would love having a regular tenant. Let them deal with it. You take the $500,000 and invest it so that you could increase your income. I don't see why you couldn't increase your income by 50%, maybe even double it without breaking a sweat.
From what you are today.
Yeah.
I think that's good. Yeah.
On that 500.
Oh, I see what you're saying. Yeah.
I mean, you could get that you could get that 500,000 to 2,500, 3,000 a month.
Oh, I see what you're saying. Yeah, that's good thinking. Also, of course, I'll have to pay the capital gains on it, but anyway.
Yes, but capital gains are just the price of doing business.
Right. Plus, we're both going to be doing that automatic, or what's that, required
minimum distributions. Yeah, you're going to be hit with those soon.
Yeah.
And, and you know what? The other thing you could do too, because it's an investment property, get a big fat down payment and do some sort of an installment sale to help you with the tax situation.
Well, you're still going to pay the capital gain though when he sells.
Oh, yeah, that's true. He's going to pay.
It's not going to change your tax situation.
But you know what? You lose the tax. You're going to lose the taxable income
I think it's what you said a minute ago.
Yeah, simplify.
Just at some point, you're going to say, I'm just going to clean this up. I'm going to pay the taxes. I'm going to be done with it. I think that's a good longer-term strategy.
I was thinking the installment thing was because you could probably get 8 or 9% in this market on your money. 855-935-TALK is our phone number. That's 855-935-8255. Thanks for the call. We'll be back.
Tom and Don are talking real money.
I didn't think the pain from the shingles rash would affect simple, everyday tasks like bathing, getting dressed, or even walking around. I was wrong. Though not everyone at risk will develop it, 99% of people over the age of 50 already have the virus that causes shingles, and it could reactivate at any time. I developed it, and the blistering rash lasted for weeks. Don't learn the hard way, like I did. Talk to your doctor or pharmacist today. Sponsored by GSK.
For your real life and real future, Tom and Don are talking real money.
Yeah, actually, you can defer the gain if you structure it right on an installment sale under IRS code 453. You can.
The 453. Hey, you didn't mention that.
I forgot.
Come on, that's
no. You can.
486.
You can defer because then you're saying, okay, like I get $250,000 down. You carry a note
installment
for $250.
Installment sale. I can see that.
Then you get $50,000 a year or something for 5 years.
I don't even know if I do that. I just here's the thing that I see every day. Clean things up. Clean that up. Clean the portfolio up. Not that you're old at 72, but you're headed that way. I'm not that far from there either. So I
have to tell you, at the airports yesterday, I felt every bit of almost 69. I was going, okay, I'm now officially in the realm of getting old.
Yeah, well, I was at the soccer field with my grandsons, looked around and realized at one point, God, I'm the oldest guy with decades or so. No. Yeah, really felt old, but it was fun. Yeah. So, at any rate, that's what I do. I clean it up a bit.
All right. 855-935-TALK. That is our phone number here, 855-935-8255. Nick in Gig Harbor, it's your turn, sir.
Hey, are you there?
Yes, we are. Thanks for calling.
Hey, no problem. Hey, I'm 69 and I've watched this world go around in circles, and I listen to you guys all the time, and you guys are the honest, smartest guys I listen to because you tell the truth. And I just wanted to touch on the national debt, how it started many years ago anyway, but, you started with Reagan, and everyone's going to cut taxes, and we're going to pay off our debt, and look where it's gone. And then George Bush, Senior, he actually he raised the taxes because he was fairly smart, and he got argued about it. And then he went into George Bush Jr., who I think is a complete crazy man, but he cut taxes, and look where we ended up, and to go on and on, So here we are. We keep spending more on the military, more on everything, but we don't want to raise our taxes to pay for everything. And Trump's the same way. And it drives me crazy how people don't look what's going on. And I don't like either Republican or Democrats, but Clinton did clean it up, and it was actually going forward.
We did have a surplus.
Yeah,
for a while. What didn't last long.
1 year, maybe two was short. Yeah.
Well, George Jr. got in there. Yeah, and what did Cheney say? Deficit don't matter, and these people, it don't matter. But how come it only matters when there's a certain group in?
Well, no. Here's the reality: deficits matter, but they don't matter if they're manageable. They matter less if they're manageable, and we don't. And determining where that line is the difficult part. But I think reasonable minds. We don't have a lot of reasonable minds in America, but we have some. The reasonable minds would agree that the levels we are beginning to approach are becoming unsustainable.
Well, the piece in the Wall Street Journal a month or two ago about when great countries change from spending the most on defense to spending the most on financing their debt and what that's meant. The news is not good there. I mean, that has been the beginning of the downward.
Where we fall apart.
Yeah, exactly. So we agree with you. I mean, again, the question kind of is, here's where we are today. There's no reason to go back and re-legislate what's happened. It's kind of what you got to fix today. I think what you said is correct, Nick. Number one, there has to be a moment where people say, yeah, this really is an issue. Number two, you have to say, we're going to have to all pay more.
Right.
And I don't know
that's
how
what you
that
got to
works.
do. Somebody has to step
has
in
to
and
be
say,
honest. Yep.
I'm willing to pay more.
I've already said, by the way, when it comes to Social Security, there's one easy fix: get rid of the cap at 176.
This is
and
so
I'll
dumb.
pay it. I'm okay with that.
This is so dumb. I make over
Sure.
$176,000 a year for the first time in my life. I would gladly continue to pay my Social Security tax over 176.
I would too. I agree with that. And I also, people forget how much money was borrowed and that has never been paid back to the Social Security.
Right. It
has never been paid back.
That's right.
And just a look back
so,
in
the
time.
Social Security makes money.
Just a little look back
it doesn't,
in time.
There's not anymore. It's still not. It's slightly positive now, but that's going away. We won't be taking in as much as we're spending. So
we had a budget
they
surplus.
Should pay back what they borrowed out of it.
Yeah, we had a budget surplus, Tom, for 4 years, from 1988 until 2001. That was it. 855-935-TOM.
Tom and Don are talking real money. Reality radio for a really great future. We're talking real money.
There is nothing we like doing more than taking your calls on Talking Real Money. That is our favorite thing to do. 855-935-TALK is the phone number you use to talk with us every Saturday, noon to 2 Pacific time on Northwest News Radio. If you're listening to our podcast, call 3 to 5 Eastern, 855-935-TALK. And let's go to Graham now. Pat, welcome to the program. Get it? Program.
Yeah.
Hey, Pat.
Well, it's south of Puyallup, but anyway, I'm in Graham, Washington.
Yes, sir.
Can you hear me? Okay.
Absolutely.
Okay. So my situation: I'm retired. I'm 69 years old. I couldn't make it to 70. I just couldn't do it. So I retired at 69.
I did mine at 69.
And I have
my Social Security. I should say.
So I have Social Security. I have Social Security every month, which totals about $3,200 after taxes. I have a military retirement, which includes VA disability, which is about $66 per month. So I'm pretty good. I make over $9,000 a month. I'm single, so my income is enough to support me. But the only thing is, I'm carrying some credit card debt, and I do have a traditional IRA and I have a Roth IRA. The traditional is about $400,000, and the Roth, which I don't want to touch, is about $18,000. So, what would be the best way? I want to get rid of that credit card debt. It's about $14,000. I had some unanticipated bills and stuff that I just had. It's not like willy-nilly went out and charged everything in the world, but what would be a strategy to pay that off?
Do you have any other assets other than those IRAs, the Roth and the regular?
Nope, that's it.
Nothing else.
I mean, I have my house,
and
my car. But I have, I own my car, pay in the house.
What's your spending per month? Is it that full $9,000?
No. Mortgage is about 22, so that's one big chunk, and then other stuff is probably maybe 2 or 3, maybe 3,000. So about maybe I would just say I'll just call it 6,000 a month. So it does leave me. I try to pay as much as I can. Based on. I have about 9,000 in my checking account, and my goal is I kind of don't want to get that. I'm not comfortable if that goes under 8,000. I just want to have some reserve. So I'm.
No.
I parsed out.
No.
Yeah,
I'm going to argue there with you.
Yeah,
because you got two guaranteed payments that'll cover all the bills. Those aren't going anywhere.
Yeah,
that's coming in every month.
Yeah.
I mean,
that covers
it
everything,
sounds to me like if you took the $9,000 that's in checking right now and the extra $3,000 that you're not spending a month, that in
for
2
a couple
months,
months, be over.
Here's what I would do. Actually, you want to make it really quick? I would spend like $8,000 of the 9. I'd spend the $3,000 in extra money. That puts you at 11, and I would take a $3,000 withdrawal from my IRA, because you're getting to the point where you're going to have to start taking it soon anyway from the regular IRA. Pay the whole darn thing off, because I know you're paying double-digit rates.
Yep. Which is going to kill you because you're not making that.
Discover card, and then I got it's among 3 cards.
Yeah.
And the thing of it is, it was dental work that I had to have done that insurance did not cover.
Yeah.
And that's a killer. I mean, I'm like, why am I paying insurance if it's not going to cover it?
Yeah, well, that's a different program. We don't got time for that one. But no, I agree with Don. I take that money out, pay it off, get it over with, because bite down hard and make it happen. And here's the thing. And then
no, he can't yet. He just had dental work done. If he bites down too hard, he might break the crown.
Chew softly, chew it very slowly, and digest it as you can. But no, thank you. But so yeah, I'm with him. Let's do that. And then, as I say, keep those cards. Use them whatever it is once a year, because if you get rid of them, then they kill your.
You don't even have to use them once
a
year. But I mean, I use them.
Don't you have to use them once a year or something?
I have a couple of cards, and my Apple card is the one I use all the time. Use it all the time. I put everything on that because I get some cash. They put it in a bank account for me. It's so cool. And then I just pay it off every month. Every month it's on auto payoff. Here's what I would do going forward. Okay, we got the plan. $11,000 coming out of your checking account and your this month's income, or next month.
Can we say take a bite out of his debt? Is that okay?
Take a bite out of your debt. Okay. Take money out of your IRA to make sure the rest of it's covered, whatever that is. In the future, you need dental work. Take it from the IRA. Take it from the IRA.
Oh, okay.
Thanks for the call. We so appreciate it. 855-935-TALK is our phone number. Call us now.
Tom and Don are talking real money.
Do you suffer from financial flinch reflex? Hi, I'm Don McDonald, and financial flinch reflex, or FFR, is a widespread condition triggered by watching too much financial news and not having a solid retirement plan. Common symptoms include doom scrolling, yelling at your portfolio, and considering gold bars, crypto, or your brother-in-law's startup. Markets don't cause panic. Not having a plan for them does. The best treatment? A real financial plan. One that's based on your life, not the latest headlines. And yes, we're talking to you, future retiree. Start your financial calming regimen today with a free, no-pressure meeting with an Appella advisor at TalkingRealMoney.com or call 800-386-3004. That's TalkingRealMoney.com, because a plan is the antidote to panic. Side effects of planning may include peace of mind, smarter investing, and fewer late-night CNBC binges. Please plan responsibly. Appella is an SEC-registered investment advisor. See AppellaWealth.com or the firm's Form ADV for more details.
Your guides to a really great financial future. Tom and Don are talking real money.
One of the few places anywhere in the country where you're going to get honest information about money. There are a lot of people who talk about money. Holy cow, there are a lot of investing podcasts and talk shows out there. But most of them are trying to sell you literally, it's not even a literal phrase, a figuratively bill of goods. They're just trying to...
They got a big bill and a lot of goods.
Yeah, and they're not that good either. They're not good goods. They're bad goods. The goods are bad. The bads are not good. 855-935-8255. Use that number. Use it. Abuse it. Call us with it. And let's go to Blaine. Jody, welcome to the program.
Hi.
Hey.
Thank you.
Thanks for calling, Jody.
Hi. I have some questions. I'm frozen in fear. I don't know what to do with my money.
I'm frozen.
Well, we're first of all, we're happy to have you holding down the border the way you do. So thank you for that at these difficult times.
Yeah,
so
that's right. She's our border guard. I forgot.
Yeah.
She is. Well.
Yeah, it's sad for business owners I know in Blaine.
I believe
because,
it.
You know,
people aren't
all
coming
our
down.
Friends feel, you know.
It's bad. It's bad for us in Florida too. No more Canadians are coming down here. They're not coming down and spending all the money.
They're not coming to Disney World anymore.
So.
They decided to
all right, why are
away.
you frozen in fear?
Yeah, tell us
Jody?
about that.
Well, as a single mom and put my kids, helped with their college, put myself through a master's degree, and then have had problems getting a good job. Finally got a good job. I'm going to turn 65 this year, and I've managed to save up a bunch of money while I was trying to find work, and Now I have work, and I'm like, okay, I don't have to squirrel all this away under my mattress anymore. And I don't know if I should pay off my house or what I should do with the money, because I only have about $20,000 in retirement accounts at my age.
Well,
and how many more years are you going to work?
Don't give out your address. We don't want anybody coming over and taking
under
it out
the
of
mattress.
the mattress.
Yeah, that would be bad.
Yeah, how many more years are you going to work?
How many more years are you going to be plugging away there?
I think unless funding problems cause, nobody to be able to have in-home care anymore, I'm going to probably be able to work 5 or 7 more years.
Okay. That helps. And so have you done any planning about where your income will come from when you stop working? Have you done anything like that? Look at that. Social Security or anything else, any other sources of income? Have you?
Yeah. If I wait until the last, I'm going to
70.
Probably have enough to pay my bills every month with my house paid off by just Social Security. But I'm a little bit terrified that might go away at this point, too. Who knows?
Don't worry about that.
No,
don't even let that enter into the equation, because there is too much. There are too many of us old people. We will all be living.
Okay.
We will all be living in the capital. We'll just take it over and we're going to move in. But no, I would not worry about that. What I would worry about is, because you threw a couple of things in there. You said, should I pay off my mortgage? And then you said, I can live on that if my mortgage is paid off. You have a mortgage, I assume.
No, I could live off of Social Security.
Yeah.
I mean,
how much mortgage do you have now?
Very, very cheap for a long time. I have about $80,000 mortgage, and I have about $80,000.
Okay. So
I don't want you to spend that. I don't want you to pay that. You need it.
What's your interest rate on your mortgage?
It is, I think it's 3.85.
Okay, that's a great rate. Okay.
Yeah.
No, you don't want to ever pay off that mortgage, ever. Do not pay off the mortgage.
Okay.
We want you to be liquid because you're going to need that cash.
I changed it to a 15-year a while ago, so I have to pay $1,000 a month.
Oh, you
but
should.
That's how I got the rate too. So I guess.
Okay. Well, how much do you pay a month on it?
I think it's about $900 now. I'm paying a month.
Is that PITI? Is that?
And that includes,
taxes.
I don't have a PIP on it, but it's my taxes and insurance are in there.
All right. Wow. Are you going to be able? What's your income? What I want to talk a little bit about. What's your income from your new job? Your next 5 years.
Current
70.
employment. 70. Okay.
Yeah.
And are you working for somebody that has a retirement plan?
Yeah, and I've just become eligible to be in that.
Okay.
From my past 2 jobs, I have about $20,000 in retirement accounts from my past.
Okay. So here's one thing I want you to do, because this is going to I would prefer to see you take the old plan and move it into the new plan. So all your retirement savings are in one place, just so we don't get this kind of confused. Number 2, I would work hard if I were you. I'd sit down and say, look, how much can I really set aside? Remember, it's pre-tax money. Mm-hmm. So it's not going to change it's going to change your income, but it's not going to be 1 for 1. How much can I really set aside in that plan each and every check?
What's the maximum I can do?
Yeah, squeeze every dollar you can find to do that. So that's why Don's right. I wouldn't be paying anything more on my mortgage. And I would be very careful about what I spent with everything, because these next 5 years, if you can really hustle it and put some money away, that would dramatically make your life different at 70 than it would look at today if you had to quit.
So I shouldn't be terrified to get in this, because
no, don't be terrified to get into something because we don't want you at your age or inclination. You see, you already told us that you are not a high risk investor. You told us that when you said frozen in fear. We knew that right off the bat. You should not put all of your money into the stock market. Absolutely not. What your employer might offer you, though, is something lovely called a target date fund.
Which is what we'd advocate for you, because that's going to have half in stocks, half in bonds.
You want a 2025 target date fund. I mean, a 2030 target date fund.
2030. Yeah, and that's going to have a balance between the riskier things like stocks and the less risky things like bonds. The idea here is to try to make you 6-7% a year. That's maybe a little high, 5, 6, something like that. Set that money aside. Do you get a match from your employer? Do you know?
Yeah, I can't remember what.
Okay, that's fine. That's every buck.
Do that.
Yep, every buck, and I'd want to at least save up to that if it's required. In other words, get the free money.
Where is that 80,000?
Yeah.
Where is that 80,000?
Is that under your bed?
You're gonna love this. It's in a savings account that doesn't earn much.
Where is that savings account? It's at your bank.
Yeah.
Yeah. Mm-hmm. You got to get that. You
not
got to
good.
take care of that. What you want to do is have an emergency fund.
Yep.
Make sure that is in a high yield savings account.
Yep. But how much if your income is 70,000, I'd be saying let's not have an emergency fund of any larger than 40. So take the other 30 and also put that in some sort of balanced index fund that creates some growth here, because you're really losing every day to inflation at a time when we really need to be careful with every dollar, make sure it's properly invested so that when we get to 70, which I think is probably that, I wouldn't plan on working any longer than that, because who knows what happens, right? Your health, etc., that you have more money to save. So yeah, I'd fix all that up.
Yeah. We wish you the best, and it's going to take a little work. And by the way, when you get ready to do that plan, get all of the details on the plan and call us back with what kind of investment options are available to you if you're not really, really clear on that.
Tom and Don are talking real money. For your real life and real future, Tom and Don are talking real money.
Hello again and welcome back. I'm Don. That's Tom. This is Talking Real Money, the money talk show that is drawing to a graceful close.
As is your Saturday, I think.
As is my Saturday.
Yeah,
and then I'll be taking another nap.
I think you've got like 15 hours of slumber ahead of you. I can see it in your eyes.
Very tiring day yesterday. It was a very tiring day. It took longer to fly from New York to Orlando than it takes to fly from London to Orlando. So.
Yeah, you could have taken a cab, I think, and got there in about the same amount of time.
As one of your correspondents said, I could have driven the Airstream down.
That's true, with
the dogs in it.
So we're glad you're back, and
anyway,
it's really great. Your daughter's an accomplished young lady, so we're happy for that.
So proud of that really young lady. It was so nice to watch her walk at Radio City Music Hall, and it was a terrific graduation, and I am so proud of her because I think she has a degree in a brilliant place. It's like
in technology,
education, technology, and AI.
Pretty well covering all the angles.
Yeah,
okay, good.
So I'm really proud of that young woman.
But you still have not told me where you are on the P-51 versus Focke-Wulf 190.
Tom's playing with his plastic toy planes,
trying to decide which one's going to be attacking.
He's doing a little World War II scenario.
No, they're going to go up They're going to go up here quick. That's why I'm asking you, which should be kind of coming down on the other one.
Are you feeling good for the Nazis in the war? You think?
Not really.
Well, then I think I'd make the P-51 come out ahead.
Even though I will be in Germany in a few weeks. So
I don't think they're going to hold the P-51 attacking the Fokker against you.
No, that's true. Okay, so we'll go with the P-51 attacking the Focke-Wulf 190. That's what you're going. That's your final answer.
Yeah. All right.
Okay.
Quit saying Fokker. Just quit.
I didn't even think of that till now.
Quit saying Fokker.
Okay, got it.
It was like
F-O, by the way, F-O-C-K-E-R.
There was a commercial during the show, and it said...
Yes, I know the commercial to which you refer.
We have like 17 colors of caulks, and I went, caulk, C-A-U-L-K-S, not Tom.
All right.
Anyway.
All right. We got to close this out. Thankfully.
No, we're not done yet. We still have a minute and 30 seconds. Okay. So,
all right. Listen, all joking
aside. Do you want to
aside,
actually share something of value with people?
Yeah, I do, because the thing is, I'm grateful for all the people we've talked to in the last few weeks, and there have been a lot. But if you're one of those that needs a little help, either just with a question answer on the show, or you actually want to talk to somebody, we do all those things. Really, we do. And with, as you say, Don, No cost or obligation, or no high-pressure sales pitch.
No
whatever it
high-pressure
is.
sales
So,
pitch,
yeah.
and a
So.
ton of aplomb.
And somebody actually told me that yesterday. They lived up to to what you say. And I said, thank you for that. So if you want that help, and it could be as easy as answering a question, or it could be as difficult as reviewing your portfolio and kind of checking on your finances, you simply go to talkingrealmoney.com, click on Meet an Advisor.
And I'll give you a perfect example of where this works.
Please.
For somebody like Jody, for example,
Yeah.
in lovely Blaine.
30.
You could sit down and have a meeting with one of our advisors, and they could look through your 401k and all this. And you don't have enough money to be a client, but we're not going to turn you down to help you, because guess what? Everybody needs help. Everybody needs a little help from time to time. I more than many.
Meet the Fockers in
Meet
Germany.
the Fockers. Are you going to go to the Fokker factory? I'm sorry. That was really funny. Thank you all. Go to talkingrealmoney.com. Go. Bye.
The opinions and views expressed on this podcast were current on the date recorded. Opinions, estimates, forecasts, and statements of financial market trends that are based on current market conditions constitute our judgment and are subject to change without notice, including any forward-looking estimates or statements which are based on certain expectations and assumptions. Although information and opinions given have been obtained from or based on sources believed to be reliable, no warranty or representation is made as to their correctness, completeness, or accuracy. Information presented on the podcast is not personalized investment advice from Appella Wealth. The views and strategies described may not be suitable for everyone. This podcast does not identify all the risks, direct or indirect, or other considerations which might be material to you when entering any financial transaction. Past performance does not guarantee future results, and profitable results cannot be guaranteed. We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. The podcast is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Appella Wealth, a fee-only registered investment advisor. Please see Appella Wealth's ADV Part 2A on our website for information regarding Appella's fees and services. Appella Capital, LLC, DBA Appella Wealth, is an investment advisory firm registered with the Securities and Exchange Commission. The firm only transacts business in the states where it is properly registered or excluded or exempt from registration requirements. Registration with the SEC or any state securities authority does not imply a certain level of skill or training. Appella does not provide tax or legal advice, and nothing either stated or implied here should be inferred as providing such advice. Thanks for listening, and please visit talkingrealmoney.com for more information and important disclosure related to performance of any specific index or fund quoted in this podcast. Is anybody still listening?